I just want to make some general observations for you. I'm sure a lot of you have got observations as well. And the first observation I want to make is, for me personally, what I like to do is I like to, when I start to see candlestick reversals, I'm really good with taking my profits. And had we taken our profits on a couple of those trades as soon as we saw the candlestick reversals, we would not have had some of the drawdown that we had. This goes back to, what the skill that I have built that I really like to use is trade to a target. And that's the weakness that I see here in the Ichimoku clouds, and this has always been kind of my beef with the system as a whole, is there's not always a clear target. And so the only way to really get an idea of when things are running out of steam is to be able to interpret your candlestick signals. Well, that's great if you're at the end of a big move. Sometimes, though, you'll interpret a signal like this one in August, and you'll get out, and then the trend continues. And so it becomes frustrating for us. The way that you really should handle that is if you do get out like that, you just always get ready for a re-entry, for a continuation. And for the most part, you'll probably be a few pips shy on that, but you locked in a lot more profit over time. That's my biggest beef with this system. The biggest beef I've got is we always are stopping out for the close of the trade. And I never like that. I've done back test after back test after back test. And consistently, over time, trade to a target and take your profit always makes more money. And so that is, I'm just going to, be candid with you and tell you the weakness of the system, in my opinion, is it does not give you a clear exit signal at the exact or very close to the end of the trend. You got to wait for it to stop out, and I don't like that. Because, as we just saw here, we actually had a profitable trade entering at 72.78. We actually had a very profitable trade. At one point, we were down to 6,800. I mean, there was, 400 pips of profit in here, bullish Morningstar reversal, and we could have, avoided some of that, maybe made a little bit of profit in there. Now, I don't know where this thing goes specifically. I'm sure coming into the end of 2008, it probably stabilized about there. If you went back through some of these trades, we really only had a couple of, real loser trades. And one of those, at least one of those, I forget which one it was. I think it was this one here. At least one of these, we had some candlesticks that told us maybe we would avoid that one. The first one was just a plain old whipsaw. We got the signal, and we lost 346 pips. And I'm glad that happened, because otherwise you would be deceived. You look at this, we did 1, 2, 3, 4, 5, 6, 7 trades, and 3 of them were losers. 1, 2, 3, 4 of them were profitable. And I think at least 2 of these, at least this one and this one, I'm confident had we used our candlesticks, we could have closed those trades for a profit. And that's really the biggest observation here, is when you blend in your candlesticks and you start to take those early reversal candlestick signals at the end of those swings, you can lock in those profits a lot better. And I think that's a lot better way to trade this than simply waiting for the stop. If you wait for the stop over time, yes, you'll get the bulk of a big trend. I think you end up with a little too much risk, too much exposure, all things considered. And that's my big beef with it. Other than that beef, what observations do you guys have? One more observation. You notice how much we did not trade. It was only 7 trades over the course of 2 years. I think it's a really important distinction for us to make. The Ichimoku clouds primarily, for the most part, got us into big trends. And that was a major distinction. That was one of the outcomes for the system. So I think all things considered, the system works. I think it works the way it's intended to. I just had that one beef. And outside of that, I'm more than happy. I'd love to get your feedback, what you guys think, and some of your own observations that we can discuss as a group here. So let me skim up through the commentary here. Richie asked how we were calculating risk-reward. Richie, that's another kind of it's not a weakness per se. It's just an observation of exposure, Richie. You're bringing in a Western technique that's not included in this. And so, Richie, what we can do later is you can synthesize that in, and you can add the risk-reward component. But, Richie, since you don't have a clear target, you can't really calculate the reward. And, again, that exposes the big glaring hole in this system as I see it. You don't have that clear target. Okay? Karen says, is it fair to look at the cloud to the right of the candles and expect that the price projected movement of the candles will conform to the shape of the cloud's lower edge? Not necessarily, no. Not fair. It might, but it is not an assumption, and you don't want to trade based on that. Kimberly says, does in the clear mean all the way to the current candle? Great question, Kimberly. In the clear means there's nothing that's really holding it back. In the case of the picture you see on the screen right here, this is where we're under the cloud, so you're under the shadow of the cloud. And in the clear means that the Chiku here, this is not a good picture right here of it. Let's see if this happened to go down so I can get a better picture for Kimberly. There we go. Almost. No, I think we got consolidation. Oh, there it is. There it is. All right. So, Kimberly, you see what happens here? We broke through support, and all the signals are confirming, and Chiku's heading down, and there's nothing for Chiku to run into. Compare that with over here. When you're right there, if something doesn't happen, Chiku can run into the price point. You're not quite in the clear. Now, when you got down here, you were back into the clear, and sure enough, we were able to trade through it. What Chiku is it's simply the price action shifted back 26 days, and so all we're saying is, are we clear of the 26-day support? And if we're clear of that, then we're good. That's really what the signal is that Chiku is giving us. Okay, you got that? Karen says, the clouds seem flipping back and forth fairly quickly in this April 8 to August 8 period. Is there any significance to quick flips? No, there's really not. The most significant thing you can take from it is not the flips themselves, but rather the Senkou B line. And you notice how the Senkou B line is flat here, Karen. You see that flatness that you see in there? It's telling you there's a lot of consolidation. And so anytime you've got a flat Senkou B, you've got consolidation. Because remember, the Senkou B is factored off a 52-day average. So that's showing the flatness that's happening there. Now, when the clouds are thin, you're set up for possible breakout. But again, wait until we're clear of all the consolidation, Karen. Wait till you're clear. Gary says, did you say the alerts you set on the charts automatically email or test alert you, or do you have to set that up somewhere else on your platform? It depends. You can set that up in Trade Navigator to email you. You can set it up in Motive Wave to email you. You can set that up in your broker to email you or to send you a text message. I know that you can do that in TradeStation. I've not set that up yet. I haven't gotten that far, but I know you can do it in TradeStation. And so it depends on your platform, Gary. You may do it on your broker side or you may do it in your charting software, but there's a lot of ways you can get those alerts. Richie says, since Chiku is 26 days in the past, how can it ever run into the price candles? Richie, here's how it does it. Do you see how Chiku's in the middle of the prices? How did it do that? Well, the current price has not been making higher highs from 26 days ago. We're stuck right in the middle there. You got consolidation, Richie. You see that? Okay, Richie sees it. David asked a great question, and David's kind of jumping to my next class. David says, can we use these consolidation signals for spreads? Oh, David, that's the next class. We're going to talk about in the next class how we can start to pull this into an actual trading strategy.